Now, SCHD or the Schwab US Dividend Equity ETF and ticker symbol DGRO or the iShares Dividend Growth ETF are honestly both super high quality buy and hold long-term dividend growth ETFs that in my opinion for a dividend growth investor are pretty much as close to perfect as it gets. But to be fair, there are some things that DGRO offers that SCHD doesn't and vice versa. And in this video, we're going to compare both SCHD and DGRO and see which is the better long-term buy and hold dividend growth ETF and explain to you exactly why. Now, if you consider yourself a dividend growth investor, make sure to stick around because these two super popular dividend growth ETFs have a lot to offer and you're not going to want to miss a thing. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first things first, if we were to compare DGRO next to SCHD as far as price return goes on the max time frame. So DGRO has been around since around 2014 and is up around 112% just as far as share price. SCHD has been around a few years longer and is up around 191%. And stay tuned because we're going to compare these both in a second here. Now, as far as a high quality buy and hold dividend growth ETF, in my opinion, I want to find something that historically at least has grown over time. And in this case, both SCHD and DGRO have pretty much grown at a very consistent rate over the past 10 or 12 years. Now, the next thing to compare, and this is where things get a little bit tricky, is if we were to compare SCHD and DGRO's holdings. I'm talking about the top sectors within each of these ETFs and even things like the top holding in each of these ETFs. Now, as far as DGRO goes, the top sectors are things like financials, technology, healthcare, industrials, consumer defensive, and others. Now, SCHD has industrials as number 1, healthcare is number 2, financials is number 3, then a smaller amount of technology, consumer defensive, etc. Now, with technology being a larger portion in DGRO's ETF, this ETF most likely is going to have a little bit higher beta, which means generally speaking that this ETF is going to move around in share price a little bit faster. Now, this also can mean that DGRO could see in theory more price return over time, because generally speaking technology stocks during green bull markets tend to move upwards very quickly. Where SCHD has a lot more of sort of the boring buy and hold different sectors as the majority of the portfolio, although there still is some technology. But if we were to compare the top 10 holdings to DGRO and then SCHD, of course, starting off with DGRO, the top 10 holdings are things like Microsoft, JP Morgan, Johnson & Johnson. Those are the top 3, making up around 3% more or less of DGRO. Now, when it comes to SCHD, we have Broadcom, AbbVie, Merck as the top 3 holdings. Now, just the top 3 holdings alone, which would you guys choose? Would you want to own an ETF that has a basket of top holdings of Microsoft, JP Morgan, or Johnson & Johnson, or Broadcom, AbbVie, or Merck? Now, personally for me, I do think that DGRO has the better top 10 holdings with things like Microsoft, JP Morgan, Johnson & Johnson, Broadcom, AbbVie, with ExxonMobil, Apple, Chevron, The Home Depot, and Procter & Gamble. Not to mention DGRO is much more diversified, which means generally speaking that there's not going to be as big a chunks of each stock within this ETF. And that's because there's over 400 different holdings in DGRO, where SCHD's top 10 holdings are things like Broadcom, we have AbbVie, Merck, The Home Depot, Amgen, Texas Instruments, Cisco, Coca-Cola, Verizon, Pepsi, and others. Now, 100 different stocks in SCHD. And I'm not going to lie to you guys, there's a few names even in the top 10s that I wouldn't necessarily even want to own. And side note here, I do own a ton of SCHD, and I'll explain why here in a second. But just going off of top 10 holdings alone, I think DGRO wins on this one. Now, the next thing we have to compare is the expense ratio. DGRO's expense ratio is 0.08%, where SCHD's is 0.06%. Now, I know a lot of you guys are watching saying, well, why is it even worth adding into a video? It's such a small amount, like who really cares? But I think it is important to mention because I do think that when it comes to long-term investing and when investors are looking to load up in a ton of shares of different buy and hold ETFs like DGRO or even like SCHD, that 0.02% expense ratio delta can add up, and I think it is important to mention that SCHD's is cheaper, so basically SCHD is cheaper to own. Now, as far as dividends go, SCHD has a trailing 12-month dividend yield of 3.5%, where DGRO's trailing 12-month dividend yield is around 1% less at 2.45%. Now, just a 1% change on dividend yield isn't necessarily going to make or break an investment, in my opinion. But it is important to note that investors that buy into SCHD are most likely, at least historically speaking, going to receive more cash flow from day one, and to be exact, around 1% more. But another important metric, maybe the most important, is dividend growth. Now, SCHD has a trailing 12-month dividend growth rate of around 3.7%, a 3-year of around 9.4%, a 5-year of around 13%, and a 10-year of around 11.39%. SCHD has had massive dividend growth historically, which is partially at least one of the reasons why I'm loading up on SCHD right now like crazy. Now, dividend growth rate is probably one of the most important metrics for dividend-focused investors that do want to build a massive compounding portfolio long-term, because simply put, whatever you buy the investment for today, you're most likely going to get paid more and more in dividends long-term, or at least that's the idea there. For a simple example of how that works, for SCHD, back in December of 2013, so around 10 or so years ago, for every single share of SCHD that an investor would have owned, they would have received a 25-cent dividend, where just as of recently, last December in 2023, every single share that a SCHD investor owned, they received 74 cents per share. So basically, more or less 3 times as much cash flow within a 10-year time frame. Now, I get it, 25 cents up to 74 cents doesn't really seem like it's going to make or break anyone's life, but keep in mind, if you keep investing long term and if you stack up 100 shares, 500 shares, or even thousands of shares, this can definitely impact your life and is exactly the path that I'm trying to take. Now, DGRO also has some pretty significant dividend growth, 12.67% trailing 12 months, 8% plus in the 3-year, and around 10% on the 5-year. So more or less, I would say DGRO and SCHD are pretty neck and neck when it comes to dividend growth, and it's been pretty significant over multiple timeframes. But now we get to the fun part, comparing SCHD to DGRO and using the metric total return to see which ETF has performed better over multiple timeframes. So over the 1-year timeframe, and again, remember, this is with dividends included. Over the 1-year timeframe, SCHD has returned 5.88%, where DGRO has returned 11.42%. So over the 1-year timeframe, DGRO is absolutely smoking SCHD as of right now. But the 3-year timeframe, things are changing a little bit. And another side note, you can see that pretty much over time, more or less, these two have traded very, very similar. And again, they offer very similar dividend yields and dividend growth. So again, honestly, as a dividend growth investor myself, I'd be very happy to have either one of these in my portfolio. But just for the sake of the video, over the last 3 years, with dividends and price return included, SCHD has won at around 26.3% versus DGRO's 25.8%. But now on the final time frame, the 5-year time frame, we can see that over the last 5 years, with price return and dividends included, the SCHD ETF has returned 84.9%, where DGRO has returned 75.05%. So even though DGRO, in my opinion, has a much more solid basket of holdings, especially the top 10 holdings, I absolutely love them. And even though DGRO also offers a decent starting dividend yield and really substantial dividend growth, SCHD still pulls out ahead on the last 5-year time frame, which again, of course, does not mean that this is going to happen 5 years from now. At least 5 years ago, though, SCHD would have been a better investment, which at least somewhat makes it win on the battle of SCHD versus DGRO. Now, all that to say that, at least for me personally as a long-term dividend growth investor, long-term, I'm going to be buying a ton of shares of SCHD and DGRO for my long-term dividend growth portfolio. Because even though both of these ETFs offer things that are very similar, they do have a lot of crossover even as far as holdings go. I personally think that having a diversified ETF and even having multiple different diversified ETFs is not necessarily a bad thing if you are a fan of both of them like I am. But when it comes to the battle of DGRO versus SCHD, the Schwab US Dividend Equity ETF, I want to hear from you guys down below. If you are, for whatever reason, only able to buy either SCHD or DGRO from right now until the end of time, which one would it be and why? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.